Former Lazard managing director and author of the book Why America Matters, Michael Wilkerson, joins us. Michael, the Dow this week entered bear territory officially. You can't explain it away. You can't make up magic numbers. People can't, reassemble the columns and snap their fingers. And, well, I guess Corinne Jean-Pierre can do anything she wants. But at the end of the day, real people that study these things in real terms are saying that this is the end of, we've entered the bear market, and we have got the lowest point of 2022. What's your assessment of where we are? Have we hit bottom? Does it begin to crawl back between here and the end of the year, or do we have more pain to come?
Yeah, thank you, Kevin. Appreciate it. I think we have more pain to come. I wish I had better news. I think September is a month that investors would like to forget. As you pointed out, all the market indexes have been down hard over the last couple of weeks, bringing to 9 months into the worst year in a long time. Got the S&P down 25%, Dow over 20%, the NASDAQ down by a third over the course of the year. Now, there are some specific things that happened in the last couple of weeks that are important for all of us to remember. Number one, inflation showed through the August CPI print of 8.3%, kind of confirmed to the markets what everyone shopping for their own groceries and filling up their own gas tanks already knew, which is an inflation, at least in the way that we experience it as Americans, it isn't going away. And that's putting a lot of pressure on consumer sentiment, which is fueling recessionary concerns that consumers just don't have the ability to keep spending into a crisis where most of their money now is going towards food and fuel. At the same time, the Fed announced another 75 basis point move. This is the fifth rate of the year. It's bringing the target rate up to 3 to 3.25%. That's the highest rate since before the global financial crisis, which is really just cold water thrown in the face of the institutional investors, especially the ones that have leverage. We saw that in the UK this week, the Bank of England had to reverse quantitative tightening, go back to buying bonds because the pension funds there were having a liquidity crisis. And they needed to flood the market with liquidity to stave off a real sort of GFC level issue in that country. Back here in the U.S., we have signs that the economy continues to deteriorate. The U.S. leading economic indicators were down for August. Now, that's the sixth straight month of decline, down 2.7% over the time. The Fed sharply lowered GDP forecast from 2.7% in June to 0.2% in September. So basically no growth for the year 2022. Now, you asked, are we at a bottom? I think the answer is no, and here's a couple of indicators why. While it's true that markets are down, as we've just described, really precipitously, valuations continue to be high. The price-to-earnings ratio, what you have to pay to get a stream of earnings income, it's fallen nearly 27% from an all-time high of 37 times earnings at the beginning of the year to around 27, 28 times today. However, that's still above the historical mean of 16 times. So on that basis, there's still a lot of air left in this balloon if you just look over longer periods of history than we have had in this kind of free money, everything bubble of the last couple of years. It tells me that even in equities, we're not keeping up with inflation. With inflation is real inflation ticking up somewhere between 8 and 10%. The earnings yield on the S&P just above 5%. So I think that every market is getting hurt. We're seeing it. We're seeing the pain now spread further and further across markets.
Well, and I think that there's a lot of common sense in what you just described. But there's a couple of curveballs that I'm wondering about and want to get your take on. Obviously, we have an election in 38 days. And to whatever degree they can, if Republicans take houses, they can put an end to some of the spending and the kind of the crazy watching it go all out the door, can't they? I mean, there's some degree of check and balance that can be instituted if Republicans win.
Let's hope so, but it always will take time. There will not be a light switch that you can just turn back on and all of a sudden everything is fine. Think about what happened over the course of the summer. The decision to drain the strategic petroleum reserves was really a political decision to try to shape
prices. That's why I disagree with you. I do think there is a switch that can be turned on, and it's producing our own energy and deregulating all the things that Biden ticketed up when he came in. I mean, Trump did it in a matter of weeks, and you saw almost instantaneous results. Everything that has been self-inflicted in this administration is because Biden had a chip on his shoulder that Trump had success with it, and he was determined to do the opposite, and it has led us into this abyss.
We may be defining the switch or how quick the flip can happen. Talk to energy executives because you're 100% right. The crisis began and persists in the energy markets.
Yep.
We completely decapitated our most valuable natural resource and our strongest competitive strength in a nation of rivals. Now, how do you get those things going again? And I think that the challenge is those projects, once they're shut down, very hard to get restarted. People have lost money. Banks are no longer willing to finance traditional sources of energy because of the pressure from ESG. And of course, just getting contracts reestablished, getting equity investors to take risks again when the regulatory switch could flip again 3 years later, it's a tough sell. I hope you're right. I hope I'm wrong. And I hope we can do it more quickly.
Well, I'm just saying, if there was a determination by the mindset in Washington to do what was right for America, they know what to do. It's a matter of doing it, and it's a matter of deregulating all the problems you've put onto businesses through the increased regulations and giving us the energy that we have sitting on our own continental shelf. We could do actually a number of things. We could starve our enemies, Russia and Iran. We could flood Europe with good quality energy and make money off of it, and we could reduce the cost of our own energy by an enormous amount. But you have to have someone in Washington, D.C. that cares, and evidently this group doesn't at all.
That seems to be the case. You know, it occurred to me that if you had a dartboard where the red and black were good policy choices and bad policy choices, throw a bunch of darts, at least you'd come out halfway right. This administration seems to have taken all of the bad choices, chosen them, discarded every reasonable thing that could be done. Energy is the biggest example. If we could get energy moving again, it'll be the biggest impact on inflation and on consumer their wallets, pocketbooks.
One last quick question for you. There's a lot of speculation that there may be some more quantitative easing coming after the election, specifically maybe after the end of the year. Does that help anything from where you sit?
Well, it'll help the markets, but it's going to hurt inflation. So you see it happening, as I mentioned, with the Bank of England.
Yeah.
They couldn't take the pressure. They couldn't take what it was doing to the markets. I'm afraid that the Federal Reserve is going to blink as well, whether that happens next month or the first part of the year. I don't know. Will that help asset values like stocks? Yes. Will it help inflation? Absolutely not. They're going to have to make a decision to let inflation run. And that is a problem, again, for ordinary Americans trying to make a living and take care of their families.
It really is.